So let's start. This week is quite an well, last week was annihilation. I would have to say that was just stocks hitting new lows. You've got Facebook. Everyone's just going down after Netflix reported a hell of a quarter. Do you believe that this week is gonna be more hell, or is it gonna be um, less hell and more bounce moves. This week has earnings reports all over. You've got Google on Tuesday, Microsoft on Tuesday after market hours. Thursday, you've got Amazon and Apple, and these are as strong as Tesla when it comes to quarter reports. Last week, Tesla didn't disappoint. How bullish are you heading into this week, or should we be more careful and more cautious, Doc? Your
Yeah,
move.
so I guess it just depends. I think if you're looking at high growth tech, you definitely have to be cautious to the downside. And if you're looking at other things like commodities and energy, and flight to safety plays, then I think you can remain bullish in all of those. Some of them have started to show a little bit of weakness if you kind of look at some charts in some of these value plays. So I do think there's like some downside risk to like a very, very broad market sell off and potentially crashing. Um, it really just depends on how like the macro winds blow. But I would bet on more downside, especially with tech. They've already announced that they're going to raise by 50 basis points, and so usually like looking back, it looks like within like a couple months, you still see like ongoing selling to try to adjust for that. So, and you just don't know somewhere along the way if the inflation issue continues to be a problem, then you have these headwinds of all right, well now are they going to go for 75 basis points raise? So there's a lot of headwinds. I just see more headwinds than tailwinds, and you just have to remain cautious. Long term, I see this ongoing broad macro change. I mean, you just see it. You have the ongoing, you know, what looks like World War III. It seems like it started already, and I don't have any reason not to believe that. Going over for like the next 5 to 7 years, that there's going to be a lot of issues that are going to turn its head, and that we're going to really have to deal with, and it's going to show itself in the markets over like the next several years. So I would remain cautious, and not even like this week or next month. We could see like some bounces, but I, I it just feels like you really have to remain cautious over the next few years. So you know,
Okay. Here's what I'll do, Doc T. I'm gonna take a look on each chart, and then I'm gonna share the screen for my charts. When I say annihilation, I'm really talking about total demand destruction.
mhm.
So last week was the first day that we saw commodities go down in tandem with the sector. Australian dollar is shooting downwards, three
Mhm.
red candles, 74 cents back to 71 cents. The first time I've seen uranium stocks actually didn't get spared from the sell off. Your favorite energy fuels goes
Yeah,
down 11
yeah.
to $8. You're seeing uranium, commodities, and I've seen some commentary about these names, like gold was falling down. They were saying that it's possibly commodities going down due to demand destruction. Is that something that you believe is happening already just because commodities have gone so high? Is it already actually a chance to be too soon to really declare that commodities have peaked? You're getting commodity stocks getting obliterated quickly. Was that a shakeout of epic proportions, or actually the recession is here, and these commodities like lithium are likely to fall further? And I'm seeing the movements last week. It was very bearish for many companies in the commodity sector. I saw that and I was like really surprised. But in I mean, I thought that people in an inflationary world would hedge themselves with commodities.
Yeah.
Jim Rogers talked about commodity super cycle boom, and the energy crisis had to be addressed. Is it a temporary shakeout, or is the claim of others that the only way that commodity inflation would fall is unfortunately demand destruction, which is already evident in today's well, some people are betting on a peak in energy actually. And recession is, I don't know if it's recession or stagflation, but they believe that the 50 basis points hike and more aggressive Fed would ultimately lead us to stagflation, either stagflation or recession.
Yeah, I think so I think what we're seeing right now is that some uncertainty is going to rear its head. And I don't think anything is going to be spared from that. No matter what you're looking at, it's kind of like when COVID came along and it's February, March, and everything's just going down because nobody knows like what the outcome of this thing is going to be. I don't know what that event is going to be. The market has a way of telling us and knows this beforehand. And so my gut feeling is that there's something like that that's going to rear its head. But if I had to bet, you know, the on the long, if you want to be on the long side, you definitely still want to be on the long side of commodities and energy because, in the faces of uncertainty, barring, it being like some COVID shutdown or maybe something happens that demand just completely gets cut off, then I don't see why that trade is still not happening. There's just and so when I kind of look at everything, if I kind of step back from everything, and this is sort of a macro view that I've had like for the past year, is that, and I alluded to this earlier, but I don't know if you're familiar with the fourth turning and sort of like these very broad macroeconomic geopolitical events that occur uh, every so often, approximately every I mean, once every century they happen. The world kind of goes into like either a depression or like some world war or something like that that kind of
Mhm.
kicks things off, and then you start to have like 10, 20 years of just a lot of uncertainty that starts to happen. And so when those things do happen, you really have to be on the defensive side, and energy and commodities really remain that area. So even those get beaten down, and maybe they're being beaten down right now. I think that's maybe the next shoe to drop is about to happen. Maybe Russia completely takes over the Ukraine. Maybe some other event happens in some other area. But you can kind of see, and we kind of talked about this at the beginning of the year. Like there's something that's about to happen. We just don't know what it is. And so I think this is something where you look at it. I distinctly remember too at one point like there was a sell off in gold at the beginning of the
Mhm.
year. It's like what is going on with this? Why is gold just selling off like this? And then like a month later you had like all these things happen, so I think the market is just kind of predicting some uncertain event that's going to happen. We don't know what it is, but we know where the trade is, and right now there's inflation. And so you can't really say like, oh, I'm going to trade tech over the next year because I'm going to, it's going to the moon. No, that's not going to happen. But if you stay in the things that people need to survive, which is energy, commodities, food,
Mhm.
we could talk about food issues that are starting to rear its head as well. But those kind of things are really where you want to be at if you're just trying to if you're trying to see see returns over the next year or two.
Well, I would agree with your call. And I'm gonna share on my screen volatility. You mentioned to go that you were going long volatility. And I have
Mhm.
two charts that have been really showing a strong bottom formation, and that would be volatility indices UVXY and VIXY.
Yeah.
I mean, we haven't seen volatility this low. I don't know how they compute these, but the fact that volatility was what 11 and hit 15 last
Hmm.
week
Yeah.
in 2 days, and then VIXI also the same from about 15 to 18. My sense is that the market is just starting to really add more volatility into their portfolios, and volatility can go both sides. It could be for the long side or the short side. Do you agree that this week you're better off just going long volatility? Because it seems as if people are on a split end on what is going to happen on Google earnings. They don't know
Hmm.
what's going to happen on Microsoft's numbers. It's almost as if technology, the big tech, has always been a safe haven and is now being tested after what just happened, as Tesla got shunned away even after what would otherwise be one of the best quarters in its history. So,
Yeah.
with massive risk aversion, and is building a passive investment still true today? I find it so hard for investors to continue to build their portfolios when, in a single day they could be wrong 20% on what happened on Netflix, and
Hmm.
that could be like, it could represent 10% of their net worth or 5% of their net worth, but still that is too huge of a drop. Do you think that there is still a case for passive investing with this rampant volatility?
Yeah. I mean, I do that. If I get paid, I put a little
So
slice
every
in.
month you
Yeah,
still
yeah.
enter a
Every
little on
paycheck I
your
put,
conviction
I have like a probably like 10 stocks that I like, like
to be
clockwork.
tucked
I
away for
just go
long term.
into it, and it's
So
I
you're
just put in my head 10 years. 10 years.
yeah,
I
yeah.
don't even look at it every day. I
Yeah,
just do
that's
it,
better so that you
and
don't
then
really
yeah,
have to
yeah,
matter with the volatility, because
yeah.
it's hard. I think like to see a good company just fall just because Netflix had a bad quarter. We've
Hmm.
seen this week a lot of new lows.
Hmm.
Some people even ask me, what does Nvidia have to do with Netflix? And Nvidia's like tanking to new lows recently.
Yeah.
Um, well, not necessarily new lows. I guess some people are just not used to seeing a Google or an Nvidia
Hmm.
fall down. And when they
Hmm.
see a 10% slide in a week, courtesy of Netflix or the overall markets on a Fed aggressive hike, they start to wonder how could they actually invest. And I also have a, I definitely need to ask, how do you build the mentality? Is it, or I mean, how do you actually handle focusing on your long-term portfolios with the
Hmm.
markets going like ape shit? Like,
Yeah.
do you hedge? Is the VIX your hedge so that you can still sleep well at night knowing whatever is happening in the world? My
Yeah.
portfolio NASDAQ is 10 years here, but I have a trade portfolio that is short the market or long
Right.
volatility,
Right.
just so I can sleep well at night. That no matter what happens, this bomb is gonna go up and this is gonna go down. So I'm like neutral.
Yeah. I think you really do. You hit the nail on the head. You have to keep different accounts, and you can't have like you have to have one account that is for passive investing, that all you do is you put money in there every time you have income that you can
Mm-hmm.
put in there. You put it in there, and you buy what's bottomed out that you really believed in. And then you have your trading account, and you have to it's like keeping the church and state separate. Like you have to
Yeah,
keep them separate. And the funny thing is that like you and then you can really analyze yourself as a trader. Like, yeah,
yeah.
these, the Warren Buffetts or whoever of the world are right. Like, if you just put money somewhere and you don't even look at it, you just put it in the S and
They'll
P
eventually
and
be
you
right.
watch it grow. Like,
Yeah.
they're right in some accounts, but and then if you just keep the other, it's difficult to do that, but you really, really have to do that. You
It
really have
has
to
to be
keep
separate
separate.
because
Yeah.
the way I hear people discuss staying invested, so it depends really on who I talk to.
Yeah.
And my sense is that while it's easy to preach that you have to stay invested, when you see your portfolio drop 10-20%, it's
Hmm.
really hard. Like what? It's like $100,000 nest egg just dropping 10,000,
Hmm.
$20,000. And I was thinking, you know what? The market's already down for most of like a year or more. And if you are thinking that growth stocks are still doomed because of the Fed rate hike,
Hmm.
my sense is that while you are right, it's possible that Square can touch new lows, for instance, or companies like Shopify and C Limited are getting obliterated last week. and hitting almost like gonna break new lows this week,
Hmm.
even before the earnings come out. Um, my sense is that these people who have been starting to buy should acknowledge that, you know what, the market is ever changing, but the business is steady. It wouldn't be too easy to see it now. But while you're shorting on your portfolio, on your trading account,
Hmm.
whatever it may be, whether it's Disney getting obliterated this week, I mean, Disney fell what, 10% as well after Netflix. I think it's now 120 and probably going to hit new lows. Some of the people are wondering, how do they build? And I was thinking, you know what? The janitor who eventually had $8 million simply was either so secure on his investing style.
Hmm.
Warren Buffett's are so secure. I always think, what what kind of person could really succeed in the market is you're really ambiguous about this whole situation, like you really don't care,
Yeah.
and you're so thinking about the next 10 years, whether you're just listening to Elon Musk discuss about self-driving cars.
Hmm.
I mean, everything is just out of whack.
You really,
So,
you really have to have, I think right now is the quintessential time to remember two things. You have to, you know, anybody can get rich, everybody wants to get rich, but nobody has the patience to do it.
and nobody
Nobody
can be
has the
disciplined
patience.
enough. I sense that the traders will just laugh at the investors because, you know, the investors have been doing what, a year of passive investing resulting to losses. Because
Hmm.
I've seen some people really, they just invest. Other than the Tesla that has gone well up, the rest are just down very huge.
Yeah.
And I couldn't really say that they have a problem with their selection process.
Hmm.
It just became such a bad year for stock pickers because,
Yeah.
you know,
Well,
all throughout,
you had to switch
you
your
either
brain
had to
off.
go
You have
commodities
to
just to
switch off the
survive.
tech. You have to switch off the tech and the valuations, and you really, and this is why I really try to focus on what is going on in the world. I know if I understand what is going on in the world, if I know that there's an existential threat, you know,
It
if
was
this thing
inflation,
is going on,
basically. It's all
and
commodities. So, like, no
if you look
matter
at the
what
world,
your
just look
views
at the
were,
world, what is going on? You know,
so the
people are,
macro managers are the winners here because
yeah,
macro economy is teetering to the brinks of recession due to
yeah,
inflation.
yeah,
And then if you were aware of macro, you'd probably be long defense industries, as you were saying,
yeah,
like you were long these Raytheon and Lockheed
yeah,
Martin way before the war
yeah,
erupted.
yeah.
So does being good of a macro economist at least helps in an investing portfolio? And should I question this fact because I think that Ray Dalio and the people in Bitcoin are most of the macro economists.
Hmm.
And even they, I find that their best, smartest people can't also hedge in this type of market. Like, what are they going? I've heard about people suggesting tips like treasury inflated
Hmm.
bonds,
Hmm.
like protected securities. And my
Yeah,
sense is you're not really protected with bonds paying you what, 2% rates or 3% coupon. You
yeah,
get obliterated in the stock market and you're going to bonds. I mean, I am a person who knows nothing about bonds
yeah,
except that bonds pay little to nothing in a 10-year time span.
yeah.
So you're
I
better
use I
off
use I
parking in
use
equity.
bonds. I use bonds as like a, like as a scale of measuring, which direction is inflation going, which direction is the economy going, and so I use it as a measuring stick. I really don't invest in bonds. I think I had like I was invested in bonds in like a retirement account, but I pulled it out as soon as the Fed said, yeah, we're not going to be buying those anymore. Um, so yeah, so that's kind of what I use it as. But investing, like if you're gonna get call options or you're gonna play options on it, then potentially you can play the volatility on like the tips and stuff like that as like a trader.
Mhm.
Overall, like using the macro, and if you're going to be like a trader, like week to week kind of thing, you
Mhm.
can't really like do macro and do like that kind of viewpoint. Like you really have to be like, all right, this is what's going to happen over the next several years. It's not like I'm a macro guy and this is what's going to happen next month. No, it doesn't work like that. Like you have to really understand what you're looking at. Like, and if you're like me, I think the world is probably going to be, there's going to be a lot of shit over the next, probably until 2030. Um,
Oh wow.
and so
Until 2030?
uh,
That's how bad this that's 7
well,
years of dilemma, 8 years.
you look at you look at like the dot com and
The
everything like
dot-com
that.
bubble
Like I think
took
the
15
closest thing
years.
that I can tell you is like it's like 2000. It's like 2000,
Mhm.
2001, and like that's where we're at. Like if it's not going to happen exactly like that, but if I had to put my tinfoil hat on, I think we're in for a little bit of pain for a little bit, and
Mhm.
so you can play the volatility of that pain and understand that, and if you go back and you look at those, there was a commodity super cycle, there were all these things that I'm talking about now, that we can play and that we can feed off of, and you can still build your passive position in high
Mhm.
growth tech, knowing that you're gonna all of a sudden now when as soon as because the Fed controls the market, there's no doubt about it. Once the
Yep.
inflation's under control and once everything's under control, and then they hit the buy button, then those passive investments that we believe are the future and that are going to be the cash flow generators, then those things are going to go to the moon. But you have to be willing to passively just see that like doing nothing over the next 5 to 10 years. So
Yeah, I was actually
I
looking.
know it's not what you want to hear, but that's
No,
that's
it's okay.
what's going on.
It's better to just keep it real. Because
Mhm,
you know what? I've been looking in like I've one chart of visual capitalist really made me think. I'm gonna share that. Um wait up. I shared it in the insights, and so much of the people really want to go long term. But this is what I find. This is like what long term investing looks like. You'll be saving all of your nest egg for maybe 5 years or 3 years. You don't know when. And one day you'll just say, this is pointless. Long term investing is pointless. How could I build my nest egg, whether it was Tesla, whether it was Palantir, and then see no returns at all?
mhm,
Until you realize 3 to 5 years later, all of your investments in the last 5 years are going to be bound to hit 10x. So, because, I was looking at some leaked messages in Elon Musk 2018 when he was still looking for more investors in
mhm,
2018 for Tesla,
mhm,
because it's hard. He was saying that manufacturing, in an interview with TEDx, just recently, April 14, TEDx had an interview with Elon Musk. And you would see in that 1 hour interview how he said, you know what? How do you know a lot about manufacturing? You sleep on the floor, in the factory, in the trenches with all your workers and employees. You're not in some ivory tower, and you really stake your skin in the game. And that's why everybody loves Elon. They know how hard what Tesla had to go through. And that was 2018, by the way. November 2018, Tesla was still losing money. And you know what? I feel as if, so he speaks from an entrepreneur standpoint. And we are just what? Passive investors looking at what Jack Dorsey, Elon Musk are now discussing on Twitter, and I think he's moved on. Last I heard, he Elon said, "Oh, I've moved on. I don't want to discuss about Twitter anymore."
mhm.
So I'm not sure if it's about Twitter or he's just memeing again. We never know with Elon Musk. Everything is a meme.
I saw
Um,
I saw I saw a
is he?
story. I saw a story that the new headline is that Twitter is reconsidering Elon Musk's bid. So I would not be surprised to see a pop on Twitter tomorrow. Just
Um,
FYI.
Maybe it's the shareholders who are voting against the board of directors, because what it seems is happening on Twitter is that the shareholders want Elon Musk as a
Hmm.
whole,
Yeah,
and even Jack Dorsey wants Elon,
yeah,
whereas whoever is in the board of directors are the ones
yeah,
hitting those poison pill.
yeah,
Um, so I guess it's a drama, it's a saga, and Elon is someone who doesn't really care whether Twitter is his or not. And if he got it, what's it to him? He's
yeah.
what, a
I don't, I don't,
trillion?
I don't like when I
Doesn't
don't
matter for
understand.
him.
I don't like when I don't understand what's going on, and there's something going on at another level that I have no idea what they're doing. There's some power play that because if you control Twitter, you can control the flow of information, and so there's some power play with the flow of information, and I think it mostly has to do with like American politics. It probably has to do with like global politics, but this is really I think what's at the crux of this sort of thing that Elon is doing. Um, and I don't know. I don't really. I don't have the
Well,
mental. I don't
if
have the
we view,
mental energy to figure out. I get it, free speech and all that. I have no idea what any of
if
that
we
stuff is about.
simply
But
view what the market thinks, the market believes, number one, that Twitter is gonna be bought. Twitter is
mhm.
gonna be hit at 54.2 and it's 49 today. People have been buying all the dips of Twitter, all the drama,
I
and
mean,
crowd is always knowledgeable.
literally the smartest
Mark,
person in the world just put billions of dollars into Twitter, and
yeah,
so I in my mind that means you should buy Twitter. I don't know how
um,
you
I
you don't go
agree.
against the smartest person in the world.
Here's the thing: the entire market last week collapsed, and the safe haven has been volatility, inverse funds, Twitter.
Hmm. Hmm.
Twitter is a long.
Yeah.
So I don't need to be smart because the world, in my view, and traders will always say this, I'm not smart. The price will tell me what is true. And the price is saying Twitter goes up.
Yeah.
Whatever Elon Musk says out there,
Hmm.
whatever the board of directors do, whatever they
Hmm.
say, all that drama, the
Hmm.
end price is that Twitter was up in a market that is all hitting new lows.
Yeah.
You know what that means? Everyone believes. And you know what? This is what I'm going to say. While I laud the fact that there are big traders out there who cut their losses fast on Netflix, my sense is that, all right, Bill Ackman, what exactly did you just do with $1 billion losing 400 million? Done. Okay, I think he lost like 400 millions,
Yeah. Yeah.
according to his filing on that.
Hmm.
Okay, he moved on. He moved on his Netflix loss, and he said that there's better opportunities. I wonder what is his next opportunity. Because my sense is that his next opportunity is still shorting the market. And Bill Ackman is somebody who loves shorting the market.
Yeah.
I feel as if the moment he exited Netflix, he spread a lot of put options all over the market. I
Hmm.
think that's a Bill Ackman thing to do.
Yeah. Definitely.
What do you think
Definitely.
he did?
Yeah. No, I think these guys are.
He
They're at
cut
where
and he
they're
short,
at.
short, short.
They're at with. He's at where he's at because he knows how to play the game. He knows how to manipulate the market.
Yeah. I think Bill is a modern day Paul Tudor Jones. The same. They're both the same. They're cut from the
Hmm.
same they're much like George Soros. And look at what happened. George Soros entered China before. He exited quickly. Good for him.
Hmm.
He
Hmm.
didn't lose much as he would have. I think initially he put $1 billion. So I think like if you are
Yeah.
playing top leagues like $1 billion long, you have to
Hmm.
have a very quick out.
Yeah.
And eventually, Charlie Munger, he eventually sold his Alibaba stake, the one he doubled down.
Yeah.
Good for him. I heard that he sold it somewhere at 120, 130 when the listing fears was supposedly over.
Hmm.
And people were surprised that Charlie Munger sold. And a lot of
Hmm.
investors said, you know what? Charlie Munger probably did the right thing for himself. It only took him what 7 years to realize how deadly his Chinese position were. I mean, either the bears were validated or the bulls were saying, I guess he gave up. The no. Um,
Yeah, I don't know. It's
right.
hard to read into
And
that
people said,
because you
and
know
people said,
these guys have access to information, you know, that we don't, and so
"Hmm,
you never know what
yeah.
information he has. Um,
Well,
it's
I think there was a filing by Unusual Whales who said that somebody always knows. And before the Netflix After Hours move, Unusual Whales was sharing a lot of 300 puts were being purchased on
mhm,
Netflix.
yeah,
So a lot of people knew it ahead of time. And so a lot of people are saying unusually being bought. So those put options on Netflix 300s printed, I guess, 10x in a single day on that gap down,
yeah,
or if not 10x, at least 7x.
yeah.
You kind of think that, all right, so there's a lot of insiders who always knows things ahead. So a trader here would have to look at what the put options on Google and Microsoft this week would have to be, because it's surreal that Google broke 2.5 last week before the earnings. You could
Hmm.
tell that the market's just afraid of the Fed hike, but breaking down supports, new lows, that's surreal. Shopify broke down. Pretty
Yeah.
sure the market's all, either somebody knows something already, and I
There's a
guess I
lot
just
of
had to follow the
there's a lot
price.
of stuff, even like utilities. I was looking at real estate, XLRE and XLU. Um, there's a lot of stuff that is considered to be defensive. They're sitting at critical support right now, and that's
Yeah,
kind of scary to think
it
that,
was scary.
if those break down, like we're going like goblin town. So I don't know. You I look at everything and I'm just like, all right, well, what do I know? What do I think I know? What I think I know is that there's a lot of issues that are just getting started, and I think
To unravel, especially on earnings. Yeah.
all this stuff is
We
going to
will all
happen,
discuss
and
lower guidance.
I don't even think we had a little sneak peek of it like over the past year or whatever, but I do still feel strongly that the crux of this war is going to be fought digitally, that there's going to be a lot of cyber issues. And so, I feel like cyber, like CrowdStrike, Palantir, BBAI, I feel like those are great investments in defensive and hedging in case this actually does come to be, in my mind. So I'm just, I feel like there's ways of hedging without being short. Like if if I feel like this is what's going to happen, like there's going to be attacks, a lot of attacks in this regard. If there's going to be issues with food shortages, like companies like Nutrien and Mosaic are great investments. If you feel like there's going to be a huge recession, liquidative services is a great investment. LQDT. There's investments there as long as you're just willing to zoom out and be like, all right, this is what it looks like, and this is what I think is happening. So, you know, there was that time during COVID where it's like, all right, we know there's gonna be a need for a vaccine, and we know there's gonna be like a need for um for certain type of staples and like Clorox and things like that. If you were just willing to zoom out when everything was unfolding, you could see that. And that's exactly what happened over like the next year or two. And so I think we're kind of like at the beginning of what I'm talking about now. Maybe a little bit further down the road, but I think we're kind of just getting started with all these things. So yeah,
Yeah, I agree with what you're saying, though, that if we're still getting started, that means further downside ahead.
yeah.
Last week was, people were safely hiding on Coca-Cola. Last Friday, down. People were hiding safely on cybersecurity. Palo Alto, down. People were hiding on the Campbell soup. Apple soup was also down. People hid on reopening names like Marriott
Mhm.
last week, 2 days down. People tried to hide on Kraft Heinz if they were Michael Burry fans. They also had a drop, but that was still outperformance nonetheless. I mean, this was what, 33 to 44? A $43 drop is still considered a win. So the utilities, the staples in general, held their strengths. Last week was really the materials sector falling down. These are big drops. Materials or energy names, it didn't become a safe haven as it should have been. That's all. Like gold was dropping, copper was dropping a lot.
Yeah.
Um, I was surprised about that, but at the same time, I felt that the commentary about further drops on commodities is a signal of recession. When you've got copper falling, the
Hmm.
only thing, as they said, Dr. Copper is a leading indicator of recession.
Yeah.
And well, everyone was always talking about recession. Nobody just really um, totally played it out. So that's why I felt that if we are seeing the market finally just accept recession and then let's just get on with it,
Hmm.
that means that we should see consumer discretionary just wipe out. Whether that be dining outside, and I feel that happened on Chipotle recently.
Yeah.
At some
I would
point,
agree.
restaurants would have to admit that they cannot just pass it on to consumers. Nestle had to say to the market, I pass it on to consumers, so save me. But that is not a solution. Okay, you increased your prices. It's not as if like consumers will suddenly wake up and drink more Nescafe.
Yeah.
Um, at some point, the market would just feel it hurt. And I've seen how people were saying, in America, they were screaming out loud about homes being 5 times more expensive than what their parents paid for
Hmm.
when they were like 30 years old. So
Yeah.
like their parents are 60 or something and they're like 25 and they're starting to purchase homes. And they said, how could I afford a loan? The mortgage rent just went from $2,000 to $3,000, and
Hmm.
that's rental. And the normal homes were like $150,000 30 years ago. Now it's like $750,000 an average home.
Yeah. No,
I don't know much about American homes.
just in the
What's your
past year or
experience?
two, there's a lot of liquidity in the real estate market here, and a lot of people are selling. But on the other side of it, they're not thinking about, well, this is what it's going to cost to buy something as well. So I don't know if it's worth it. If it's worth just taking out the equity in your home and then using that and putting it somewhere that it could be put to work. Because I don't know that the housing market is going to be sustainable at this level, especially if a big recession hits. So yeah.
Yeah, like it is critical for households to be able to afford a home. And
Hmm.
that's why isn't it like the first thing that Elon and Jeff Bezos were talking about on Twitter was a homeless shelter for their headquarters. I know they were joking about it, but
Hmm.
I don't know if they were joking or if it was real because Jeff Bezos really made, I think, some Amazon offices like a homeless shelter, I believe.
Oh really? Yeah.
I think a part of it. So it's just surreal that, okay, so we are in a recession, housing market is in a bubble, everything is in a bubble. I need to save myself and my family's savings. Uh, the bonds are a bubble. Okay, the way I see everything happening, there is no flight to safety towards Bitcoin either, because well, supposedly Bitcoin was supposed to be savior, but it's still 39,000. It's not resilient enough to really save a family. Um, my sense is that all right, I'll just join the dark side and
Hmm.
okay, Jeremy Grantham calls the world a bubble. Everything is a bubble.
Yeah.
Growth stocks were the first to fall. Might as well now really short those anything that went up, whether it be consumer discretionary stocks. Because, I looked at Airbnb, I looked at Booking.com,
Hmm.
last earnings. yeah, I know they really had a swell of a time. And just like United Airlines said, we're starting to be profitable. Obviously, like after 2 years of people not going out, they would want to travel somehow. But would they be frequently traveling? Like, my sense is that after 6 months and a year of traveling,
Mm-hmm.
2023 is going to be bad or 2024 is going to be bad. So you're probably going to see 1 to 2 quarters of good guidance from the air booking, like Airbnbs,
Mm-hmm.
uh, travel related names, but eventually it's just going to catch up. Some people are even telling me that China is doing all these lockdowns so
Mm-hmm.
that it's not about COVID, just so that they can tell the world that the manufacturing sector is really contracting, and
Mm-hmm.
they'll blame COVID, just like how Biden is blaming inflation on Putin, when it
Mm-hmm.
wasn't really Putin that started inflation. It was the stimulus plans.
Oh yeah, yeah,
The
yeah.
housing bubble was a
All this
function.
political jawboning about inflation,
It
like
was
whose
never
fault.
about
I
Putin.
mean,
It was
yeah,
never about that.
yeah.
He couldn't even admit that the stimulus plans were the primary reason, because already Trump already had the stimulus and he had it, and he
Mm-hmm.
added more.
Right, right. Yeah,
Like,
this
you
was
just have a
this was
lot of
in. I mean, this
connection.
was you could have put I don't know. You could have put The Rock, Dwayne Johnson, and president, and whoever. You could have put Ronald Reagan, and this was going to happen. Inflation was going to happen. Everybody knew it. Everybody was barking about it in 2020. They already knew.
2021, even as early as Feb, January, yeah, even November 2020, I heard about it
When
already.
you print a, like
They
30% of
printed
the
something
world's
like
supply of money in one year, guess what? We're
trillions,
going to
right?
get inflation.
Yeah, yeah,
Shocker. Shocker. I'm so surprised.
yeah.
um, yeah, I don't know. I think when we talk about, all right, well, there's nowhere safe to go. There's, what's
Bonds
defensive.
aren't safe.
There's the things that I'm talking about. What do humans need when they're desperate? They need
Just
commodities.
food
They need
and shelter.
energy. They need food. All these things. These are the things. These are the only places that you can put your money and be like, okay, it's gonna be okay. Other than that, I don't know what to tell you. I don't know what's gonna happen. The world could go to shit, and then there's no more McDonald's. Could you imagine if all the money that you have in McDonald's is just like, because nobody, nobody,
In the Philippines, they're talking about French fries having a problem. So in the Philippines, McDonald's is having a problem because the
Mhm.
cargo shippers are not having enough to pay the freight rates, perhaps because freight
Yeah,
rates went
yeah,
10 times more.
yeah.
And because of the war, they
Like
have to
literally,
raise the
look
supply
around you.
chain.
Things are not right. Things are not right. Things are not good. They're not. I'm sorry. I'm sorry. This is
It's
news. But
okay. We're realists. We're realists. Like
yeah,
the world is going to some sort of
yeah,
hell and
yeah,
everyone's losing money.
yeah,
And the only way to save yourself is through inverse funds
yeah.
or sorting
Volatility.
certain
Right now,
issues.
right now, I'm right now I'm long UVXY.
Yeah,
And
just
then
long
I'm still
UVXY, long
and I'm still long.
VIXY
I'm still long oil. I'm still long uranium and copper, some
through
steel.
commodities. Yeah, I
Um,
listened to the uranium people who
mhm.
really are long on uranium ever since. Um, in a way, I think they're right. Like they're just building a portfolio that they know
Mhm.
that the world is gonna need food and energy. You already have a crisis. It's not as if like these demands are not gonna be true. Um, and yeah, you're right. Where would the money flow into? It's
Yeah.
not going to go to tech, obviously. It's not going
Yeah.
to go to Some of them are even questioning cybersecurity, and I would agree because cybersecurity stocks are trading at lofty valuations.
No, they are. They are, but they're gonna have a,
You're going to have growth
in my
because of
view, in
government
my view,
spending.
in my view, it's about momentum and like like money's gonna always flow to where it's gonna do the greatest good. And I believe that the greatest good or the perceived greatest good is gonna be in protecting assets that we have online because everybody has their money online.
You cannot
Once
hack.
those
Basically.
once
Yeah,
those come
true.
under
They have
threat,
to protect
once
their
those come under threat, everybody's
assets.
gonna be like, all right, this is where the money's gotta go.
Yeah.
So and then there was another thing that I was gonna mention, as far as yeah, no, I kind of lost my train of thought about it, but um yeah, never mind. It was in regards to something that I kind of lost my train of thought. So
You were mentioning something like once an asset is in threat, people would protect that. People would do all they can to essentially protect what they have. And
yeah,
so the
yeah,
governments all around the world have no choice but to spend on cybersecurity. That's why
hmm,
you
hmm,
disagree with cybersecurity being expensive, simply
yeah,
because
yeah,
Germany, Poland, I mean, all the European governments have no choice but to increase cybersecurity because
hmm,
of what exactly happened. And
yeah.
all the world will have to invest in
Well,
uranium.
you if you really look and you think about it, right? So if you have this sort of growing populist ideas, everybody's been separated from each other over the past 2 years, and so really the only way for certain people to stay in power or for certain countries to gain dominance is really to engage in some kind of conflict and some kind of war, right? And if you're going to cause damage to somebody right now at this very moment, where can you inflict the most pain? Can you inflict it by dropping a nuclear bomb, or can you inflict it by taking out somebody's entire software infrastructure for their water system or for their energy or for their food? So in my mind, this is why I think that cybersecurity is going to be top of the food chain, sort of, so to speak. So that's kind of where I'm at with it.
Okay. Which cybersecurity name are you most bullish upon? Is it
Yeah,
CrowdStrike
yeah, yeah. I like
or is
CrowdStrike,
it Palantir?
Fortinet, Palantir, and then if you want to go like lower speculative end of it, you can go BBAI, and then Cyrn, Cyrn. Yeah, some of those lower ones have kind of ran already, so you always want to buy them on dips and stuff like that. But yeah, those ones are you know, or you can just do the ETF, the
Yeah.
hacker
No,
bug.
but I think you're better off choosing which cybersecurity name.
Hmm,
Because if you were somebody who, I mean, if I was the government, obviously,
hmm,
I wouldn't spend on just any cybersecurity. So I know the government is spending on Palantir. I might as well just join with Palantir.
hmm,
And I know that Amazon has already partnered, and all these banks have already partnered with CrowdStrike for years and years.
hmm.
Others have been partnering with Palo Alto Networks and Fortinet. I wouldn't choose Hack. If I know this company partnered with this, it's because that worked. So
Hmm.
I would rather just do what the companies have already done. Partner with who they partnered. Anyway, it's just top five. I wouldn't even go because this is
Yeah,
funny now.
I
You
agree.
have
I agree
to
with you. I never really like invest with ETFs. I have like a retirement account that it goes into ETFs or whatever. But as far as if you're managing an account, even if you're doing passive, if you're in tune and you can pick a company that is top of the food chain in terms of like e-commerce or
Mm,
Nvidia with chips,
mm.
Shopify, if you're talking about like online e-commerce, um, why not just go for the best one?
Yeah, I think other people are substituting companies for ETFs, but
Hmm,
after a while, you just tell themselves, and I think this is true. Why do you really want to order QQQ when all you want is just Tesla and Microsoft and Google? At some point, you just tell yourself, all right, either you don't really know what you're doing, that's why you're buying
hmm,
QQQs,
hmm.
or simply put, you don't have enough money to buy the fangs.
Yeah,
That's
yeah.
all. Like, and now that there is a 10:1 stock split on Google and Amazon, I think, or Tesla and everything, you couldn't really say that you don't have money. Because these stock splits are meant for you to buy these companies if you truly just want Apple or if you truly just want Google. You
Hmm.
cannot say that, hey, I want to invest in the Qs. What do you think is better for an investor? Does he choose the company? Because I feel that they begin to be better investors and better informed if
Hmm.
they know what's happening on Google's quarter
Hmm.
rather than the Qs. Because the Qs is like, how am I going to study the Qs? It's a function of so many names.
I mean, so we're sort of like anomalies in terms of people that I meet every day. Like,
Mhm.
we think about the market, we understand the market, we think about companies, we're willing to put the work in and invest in companies. And I think there's a very small percentage of people that actually do that and think about that.
Okay.
So if I'm thinking about the regular person, the average person, then yeah, like family and stuff like that. Yeah, just put your money in, like, put your money in the spy, and go live your best life. Um,
That's
and
why the best selling product is still the spy.
yeah, yeah.
Google made trillions of dollars.
Hmm.
Well, he didn't have to be an Elon Musk. He has a $1 trillion industry
Hmm.
just selling the spy because the world just want vanilla ice cream.
Yeah.
You don't want to give them chocolate. They want vanilla, just give them vanilla. And
Another
if they
thing.
get 10% returns, that's great. If they don't get it, who cares? They wanted vanilla, you offered it.
Another thing I tell people is just invest in the things that you use every day. Like, what do you use every day? You know, do you watch Netflix every day? Well, maybe you should put money in Netflix you send them money every month. Just match it. you know, do
it,
like a
it, it's it's a
you
problem though when I find it true that Netflix's big problem today is how do they actually build a portfolio where they charge people and then the other side is free. So they're
yeah,
now battling with a lower tier ad model.
yeah,
I
yeah.
don't know if it's gonna be like country per country
Hmm.
because like so other people would find a way to hack into their model as well. Um, but I don't know if it's something that is bound to happen anyway. Like everyone has a lower tier ad model. Spotify
Hmm.
had, it didn't succeed though. That's why Spotify's hitting new lows.
Yeah,
Uh,
I'm not very bullish on
'Cause
Spotify. I've never really been
I'm not bullish.
bullish
I'm
on it.
not bullish on Spotify, but I question the business model of having something that is, I'm not really sure. Is the freemium model of Netflix gonna obliterate the current business model?
Yeah.
It's a
To
gamble.
me, with the streaming services, it's always going to be about the content, like who's putting out the best content. And for my money right now, I've loved HBO since, I've watched HBO for like forever, and they've always just had like great adult content. Um,
Yeah.
what
A
is it?
lot of people said to me that they think that the biggest problem of Netflix has always just been content.
Mm-hmm.
Because after a while, they just run out of shows to watch, and it's just a lot of B movies.
Well,
So I've been seeing commentaries. Sorry, I know I didn't let you speak, but I've been like reading articles,
mm-hmm.
and they were saying things like Netflix has a bunch of cash still, and they've got convertible debt that they just paid out. So and in a year they're like what, churning $20 billion of content for nothing.
Yeah,
Like an episode of Stranger Things is $30 million. That's
yeah.
expensive to
No, it's not
produce.
cheap. It's not cheap. The other
It's
the other
not.
part when the other part and the thing I think that Netflix does, so like I love HBO, HBO Max, great content, right? But if you really like look at the difference between them, it's really like the software and the AI that Netflix has. Like Netflix knows what you want to watch before you even like you just turn it on and they're like, hey, you watch this, so maybe you'll like that. And so I think if you kind of get like Disney and HBO to like get in that same Hulu and all those other ones to get in that same place of like, hey, you like this, so maybe you'll like that. What it, I'm not a software engineer or anything like that, but Netflix, I can tell you, They're like they have like Google and Tesla level software engineers there that are running that because they know what you want to watch before you even before you even know. So that's really like the key. I think that's the key advantage that Netflix has is that not only the content, but they can direct you and makes the experience a lot easier for you.
I think as long as Netflix delineates its ad tier model with Roku, because I feel that they would work together at some point,
Hmm.
because
Hmm.
Anthony Wood has been discussing working on their operating systems together with Netflix. And it doesn't seem as if Netflix would have to recreate the system altogether if Roku's OTT has been working quite well. I find for the streaming business to win and for the ad tier model to win, they got a partner. At some point, from a
Yeah,
business perspective, I really see Netflix and Roku would partner at some point because
it
obviously
makes
Netflix
sense.
and Disney had the chance to partner in the past to dominate the entire entertainment industry, but they didn't,
Hmm.
and they went to war. So the thing that would make sense here is consolidation, and it's happening already. Amazon Prime Video bought MGM, HBO Max with Warner Brothers, and just recently they cut off CNN Plus, knowing that
Hmm.
it wouldn't make money just a month after launch. So we're seeing very fast consolidation in the industry so that the margins will remain high. And in
Yeah.
the end, what I believe is that, all right, in the end, let's play this chess game after 5 years.
Hmm.
The winners would end up being Disney, Netflix, HBO Max. That's just my
Yeah.
view. Whoever wins, it's going
And
to be
that's a
the
good
same.
and that's a good example of maybe an industry that it would be better to buy an ETF.
Hmm.
Like
The
Roundhill does a good
communications
ETF for
ETF.
live streaming.
Yeah.
And just broadly, so you don't even have to like stress. Streaming is going to win, right? So it doesn't matter who's going to win because they're invested in all of them. Like
Yeah, so
potentially,
you just win the entire media empire. I haven't watched Succession. Of course, everyone talked about it.
it's
You
amazing.
have
It's so
HBO
good,
Max.
so good, so
So I
good.
don't know how I would subscribe to HBO's. Oh,
I just finished Euphoria too, and that's phenomenal. Yeah,
yeah,
it's really good.
everyone's been telling me that the reason why Netflix has been losing is HBO Max has better content.
Yeah, yeah.
So they just really need to spend well on quality shows because
HBO
they just been churning out quantity.
HBO has always made like like they did The Sopranos,
Game of Thrones.
Game of Thrones, Deadwood, all those. Yeah, they've always been really good. Yeah, yeah,
Yeah. It just tells you that money can't buy good content.
yeah. Exactly. It's all
Netflix
about.
has money,
Hmm. Hmm.
but they lost what? In overnight 40 billion? Was it?
Yeah, you have
40 billion dollars.
you have
Like
to.
2 years worth of content.
There's something to be said for like what is it? Artistic liberty, or I forget what the exact phrase of that is, but when you let people make content that that they want to make in a way that they want to make it, and sometimes it works out for the better.
Well, John Favreau had something to say, Iron Man 2. He made this show, The Chef,
Hmm.
around 2014. Well, it's good movie. It's
Yeah,
a
yeah, I remember that one. I
did you
remember it.
watch that?
Yeah, I
Yeah.
did.
But people were saying that was John Favreau telling Disney that I'm a cook
Hmm.
and this is how I make my movie. And if I'm gonna be dictated by Kevin Feige, i.e., the guy who played the owner of the restaurant,
Hmm.
supposedly, people are saying, if you really watch the show The Chef, this is really John Favreau telling Disney, I'm the chef. Let me make my movie my way, and
Yeah,
you'll do well. That's
yeah,
why, in the end, for
he
those who
wasn't
didn't watch
wrong.
the show, sorry if I'm gonna spoil this for you. In the end, the critic and him work together, and so you've got great movies afterwards, Iron Man 3, and so on.
Yeah,
And the
yeah.
entire universe of Disney was saved. So basically, you really just have to trust in the chefs. And nowadays,
Hmm.
if you're going to go along Netflix, you're going to have to say, you got to trust the people in Stranger Things. You got to trust the people who did the Squid Game.
Yeah.
Money Heist. And
Yeah.
even if I never watched Bridgerton, I never did. And people said all of these woke memes about it. And the point is, the fact that they made a meme about it means that they've watched it. I
You
didn't
know,
watch it at all.
you know, I was reading something today, and if you had put $1,000 into Netflix the last time they lost subscribers, which was like 10 years ago or something like that, that $1,000 would be $24,000 today. So,
Because you,
so you're in the same situation as you were 10 years ago,
yeah,
and
they weren't this low from a 10 to 20-year perspective in their career. The
mm,
nice thing about Netflix is that they're 25 years since 1997. You could spell out all of their blunders. 2011, when they raised the prices on
mm,
Quickster TV, the stock also tanked. So you've always got to choose a point where Netflix is really cornered to the ground and people think that they don't have money when in
mm,
fact they've got Shonda Rhimes, who I mean now they're calling her Shonda Land. My point is that Disney was saved by a few directors, okay? Disney would have gone nowhere without Marvel. So you have to understand the entertainment industry is cyclical, but
mm,
once you've got these great directors who can plan out your next 5 years, this is a win for Netflix and Disney. Disney
mm.
falling down to $100 tomorrow. If you're
Yeah.
really long term about this, you
Mm,
gotta go long. And I
yeah.
don't care if it goes $90 tomorrow or $80 or $70. That's just making sure that you make more gains in the next 5 years. And
Yeah.
obviously, everyone's gonna talk about inflation, whatever. But let's concentrate on the businesses here because we're not talking about some shitcoin out there. We're
Yeah.
actually thinking about $200 billion businesses who could hit 500 or a trillion. Well, not trillion.
Yeah.
But some people would argue it could be $1 trillion. Who
Yeah.
wouldn't?
Yeah.
I mean, you will never know the entertainment industry in the future.
I
Could
like it
they
when
actually
I like it
successfully?
as exciting as it is when these companies are like, you own them and they're going up. I actually like it a lot more when they're getting beat down. And then I can,
Actually, when they're getting beat down, you question your
I like it
thesis,
more. I like it more.
question your long term.
I
And
don't,
then you
I
realize,
don't
you know
though.
what?
It's
The
just,
market's wrong here because I have evidence about secular streaming killing
mm,
cable. It's not as if like they're gonna what? They're gonna switch what? So they're gonna watch YouTube forever?
mm-hmm.
Hell not. They're gonna go watch a movie? That's more expensive.
Yeah.
So at some point in time, you gotta say those people are not forever unsubscribing.
Yeah.
Maybe a few will unsubscribe. They're really having a tight pocket now. But the majority of people, you just switch the password sharing, kill it, and they would be forced to pay. So that 5 million subscribers that you need would just come from that piracy.
Yeah.
Well,
Yeah.
I think there are solutions. I don't think it's a non-fixable business. So, well, that's why I'm still long biased, and I just think that okay, you don't shorten Netflix at $200. Good if you short it at 300
Yeah.
above.
Yeah.
But 200, what? You think it's going to go $100? Because if
Yeah.
you're not seeing it the 50% sell off, you're better off shorting something else that truly has potential to go down. And
Yeah.
I feel consumer discretionary has a lot to fall. So let's talk about those. Oh, sorry, it's already an hour. I talked a lot. I didn't let you speak too much.
No, no,
Um
you're good. You're good. I feel like it was a good
yeah.
conversation. Good
Mhm.
conversation. Important.
Yeah,
Very
so
important.
it's important, I suppose, for any investor to stay invested in their passive game,
Hmm.
but also understand passive is passive. It looks easy, but at the end of the day, you could always tell yourself it's pointless. You're investing in what? Disney for 5 years?
I mean,
Look,
short
today's price
term,
is the same as 5 years.
like everything right now, you're looking at it and you're like, you have to, you really have to believe in what you're doing and know that right now the market is a voting machine. And if whatever you believe you're investing in, that the weight of what you're investing in, that long term the market is a weighing machine. So I get right now the vote is coming in and it's like you're losing, but long term, if what the company that is actually going to be there, they're going to be the ones that come out at the end. then it's okay. It's fine. You have to be patient. You have to be very, very patient right now, and that's fine. I've been invested for a while, and I've just been. This is not anything new. Like this is actually most of the time. Like whatever happened, like whenever whatever happened, like 2020, like those are anomaly years, and they come every like 5, 10 years or so. And so now you just
You,
have to be passive and be willing to be patient and invest
it's
and you live
always
your
the best
yeah,
time to
yeah,
invest when there is a crisis. I've
yep,
always
yep,
felt that. And what the current specific companies that are in a crisis would be Netflix and Starbucks. And Disney, these are household names. So you wait for whenever they stop crashing down, or you have to have your eyes on the prize. That's what
yeah,
I feel.
yeah,
You have to have your eyes on your prizes. Okay, maybe Netflix goes 150. I don't know.
mhm,
Maybe Starbucks goes $60 because of the labor union is growling
yeah.
larger and larger. And
I
it's
see.
funny. Starbucks just has been lauded in the past for how much they treat their baristas well,
Hmm.
culture and work. Isn't it true? And that is why Howard Schultz is back in the game just to straighten out what has gone wrong on Starbucks over the last how many years.
Yeah,
It's
yeah.
amazing time.
I prefer Krispy Kreme donuts for investing, but that's okay.
Krispy Kreme.
That's just me.
I
That's just
love the I love how Krispy Kreme manages to sell. So only when I studied it, right? Because you asked me to study and look at it. I was amazed. I'm not sure if my numbers are correct, but they make like 3 times larger sales than a McDonald's branch over the same square meter.
yeah,
And
yeah,
of course, from a franchising perspective, that means that every Krispy Kreme generates 3 times better ROI rather than McDonald's. But the
yeah,
market, of course, will see that McDonald's is McDonald's and Krispy
yeah,
Kreme is not
yeah.
as stable on a fast food game
Mhm.
because it's burgers versus donuts. The hard thing I think with these businesses, even if whether it be Krispy Kreme or Dunkin', is that no matter how great the management is, they would often just be seen as a fast food. It's not
Mhm.
gonna be like a fast food or consumer good never generates as much buzz versus this innovator Elon Musk, like you could be the best in your game and
Yeah,
yet you would never be seated with the best in tech.
yeah,
That's a part. That's a hard part. Hey, I'm really good in McDonald's, but I'm really good in Krispy Kreme. But, okay, in our shareholders meeting, we'll be seeing all the Warren Buffett disciples. We won't see a young millennial out there. I don't think so. Or, how all these crypto people, you'll never see them in an annual shareholders meeting of Krispy Kreme. I, I
yeah,
I don't see that happening. It's gonna be like 50-year-olds who wants to retire with a dividend portfolio, and that's I may be stereotyping, all right, but the young kids they would go for the growth. They wouldn't go
yeah,
for consumer
yeah,
goods
yeah.
unless
They want
unless
the
they really
next. They
like.
want. They want the
Uh,
next big thing, like the Bros and
they
stuff
would
like.
go for the AI. Like I
Yeah,
think they're gonna go for Nvidia. They'll go for maybe
yeah.
self-driving cars,
The,
whichever
the
they
the
prefer.
question is are they going to have are they going to have that 5 to 10 year outlook to be willing to sit on it? So
Well, I
that's where
guess they'll just sit on
that's where they're
Tesla
going to struggle.
forever.
They're going
You know
to,
what? I think the default of every millennial is that, look, I just won't go against Elon. That's it.
yeah,
My
yeah,
life investing plan, don't go against
yeah,
really,
exactly,
really rich
exactly.
and really smart people. And that's
Yeah,
my
yeah,
investing plan.
yeah.
Whatever that may be. Okay. Thank you very
All right,
much. Bye.
all
See you
right.
again
We'll
next week.
see you
All
soon.
right.
All right.
Bye bye.